Welcome to Friday Live. Every Friday, the partners at HPK Provident get together and discuss the latest trends going on in the markets, the economy, and tying in some financial planning topics to our blog posts. So, David, we have you here today. Welcome.
All right, it's great to be here.
How's the week going?
This is Friday. I'm happy. I dressed in the only red that I had. Happy Valentine's Day. I even have my little red heart necklace.
Well, good for you. You're celebrating the holiday more than I am.
Pitter patter my heart. I have grandchildren, a lovely wife, and a great family. So, what can I say? Love them to death.
All right. So the typical format we do is we'll cover the economy and the markets, and then go into some of our financial blog posts for the week, which tie in a lot of financial planning topics. So we're calling this one the hot off the press one. We're doing it a little earlier than normal to cover the latest CPI data, which is the inflation data. So what we got was a 0.3 tenths rise in the core, which came in a little higher than December, but roughly in line. And that brings us to 2.5% on a year over year basis. Now, that was the core number. Headline, on the other hand, came in a tenth lower than expectations to 0.2 and rises 2.4% on the year. So that sounds good, right? Well,
that sounds great.
Yeah, the 0.2 reading is a good number. But I guess what they did with the year over year number, they counted October as a 0. So that's a little distorted to the downside. We are seeing some tariff effects. New cars, for example, was a big contributor. Airline fares was also up. And we did get a report yesterday that the tariff rates are higher than expected on a year over year basis. They were, I think, around what I say, 13, 14%. Yeah. And then a lot of that, most of that's being absorbed or passed on to the consumer. So other areas of this report, we are seeing a deceleration in the rental component, the owner's equivalent rent. I don't know if we believe that trend or not. I mean, I think so. It has been very delayed off of the data. So, but I mean, the bottom line is we have to follow what the Fed is tracking. The last report was a hot PPI. So that's going to feed into the core PCE deflator, which I think is expected to come out at 3.1% on this upcoming Friday. So that's really what the Fed's going to be paying attention to. So this report is a welcome relief, but I think we need to focus on core PCE more so, which is probably going to keep the rates higher for now, at least. We got a lot of other data this week, too. Do you have anything to add to the inflation data before I move on to the other key reports we got?
You realize headline being 2.5 year over year is a huge. That's huge from being 6% previously. Okay, I mean, so the trend is our friend right now, and is the Fed is concentrating their efforts on bringing that down even further. Okay, but that's certainly below historical averages. Well, then we sort of scratch our heads and say, well, why am I paying more for gas now than I was in December and November?
Okay? That's a good point. And just general items and overall, like food, like we see the higher price. The consumer sees the higher prices still. They didn't come down. It's just a deceleration over the last few years in the amount that it's actually going up. So prices are still high. And that's really what consumers are seeing.
So is it ever? I mean, it was an added bonus to see the gas price go down significantly like that, and they've creeped back up. Are we going to see anything like that with foods and cars and so forth, or are we going to see inflation at a 2.5% average above that? We don't know. That's that uncertainty, but I won't be
Yeah, I mean,
surprised either way.
typically prices don't really come down unless there's a recessionary environment.
So, and we don't see any kind of recession anytime soon. Pullbacks, the jitters, absolutely. We had them in 2025. We're going to have more in 2026. Um, Look at them as buying opportunities, and we'll talk about that a little bit later on the pod on this cast.
I'm not completely checking off my bingo card for no recession in the next 18 months. I'll let the data take me there. Right now, I'm not really liking the overall data. So
Well, I was
we
looking
got
for 2026. I wasn't looking into 27. So
yeah. I mean, there's some tailwinds. Um, Tax refund checks are supposed to be big. That should be. Although I did hear some rumors that that's being a little pulled ahead, which into like credit card spending. I don't know if I believe that one. I think that's a little bit of a pessimistic view. Now, is it priced into the market? Probably because we know about it already.
yeah.
Um, and I think if we do end up, even if we have little stickier inflation in the first half of the year, um, I think the trend in the labor market is decelerating at least, if not really stalling out. So we did get the non-farm payrolls. It was a delayed report. We usually get it the first Friday of the month. It came out on Wednesday. The headline number was surprisingly good, if you believe it. I'm sounding a little pessimistic today, aren't I?
Well,
I
I
think
think what you can take away from this, Mike, is don't don't believe everything you hear. Don't believe everything you hear or read. Have a little bit of skepticism. Have a little bit of caution. Hey, we'll be talking about Warren Buffett's the post on his sage advice. Uh, I'm tipping our hand, but one of the big takeaways from what Warren Buffett, he had $400 billion to on cash in 2025. And at the end of 2025, before he signed off as a CEO, he still had $400 billion of cash because he stuck to his principles. If he didn't see something he liked, he wasn't gonna buy it. So
Yeah. And I mean, they're such a big company that they really have to wait for an attractive opportunity that is big enough and liquid enough for them to get into.
yes, yeah,
But yeah, anyways, my skepticism is we've been seeing flattish readings for the last few months in non-farm payrolls. It came in at 130,000, the headline number. Private was even better at like 170. So why would we see the sudden jump? Part of it can be explained to I always say January is a very weird month when it comes to data, just because of the seasonal adjustments. So when you get less layoffs in January, it tends to push the number up just because they adjust so much for it. Because the typical trend was you would increase hiring in December for the holiday season and then let go some of those workers in January. So when that doesn't happen, you see a big upside, headwind or tailwind to the non-farm payrolls. Um, Outside of that, we did get the revisions for 2025. They came down quite a bit, less than expected, but it still brings us to a monthly average of, I think, around 15,000. So pretty much no job growth. A lot of that has to do with the deportations and lower immigration rate, and the birth rate's been low. But on the flip side, the supply is also coming down. I mean, the demand. So we saw that in the latest job openings report, really decelerating. So we got the unemployment rate that did tick down to 4.3. Wage growth was relatively strong, but I'm really not expecting these numbers to continue in the coming months. We're seeing all these AI headlines, and if anything, it's going to put more pressure on the labor market. When it comes to the consumer, retail sales were pretty weak, came in flat for the month. The control group that feeds into GDP, which I think we will get fourth quarter GDP preliminary next week. That was down 0.1%. So we're seeing some pullback in the consumer. So we'll just continue to monitor it. If people can spend, they will spend. But it's definitely, I mean, everyone talks about it in the markets. We have a K-shaped economy where the wealthy people holding both housing and the stock market are doing very well, while the lower income cohorts kind of struggling. And that's kind of the same with the economy as a whole. We're seeing very few industries really accelerating, and then we have some weakness underlying the surface. And I think that's going to be the trend continuing throughout the year. I mean, the AI infrastructure should be a beneficiary. Tech stocks are having really good earnings, and it's been a good earnings season overall. But why tech stocks are getting punished, software is a big drag, just because of the risk that some of those products are going to become obsolete. And then just the mega cap is spending so much money. I think the Mag 7 is spending the amount of many countries making a year, not spending a year.
they're spending on research and AI is more than the gross domestic product of a number of countries. You're right, Mike.
So that was pretty much the data for the week. Looking at the S&P 500, we're kind of closing out of this ascending triangle now. So it could break either way. Yesterday, we started out on the upper end of that channels, which is getting pretty narrow. We did break through, but we need confirmation of that. Right now, we're essentially trading flat on the day as we record this at 9:45. And then we have this pattern here, which is a short-term, I guess now triple top. If we break that, our price target is going to be around this 65.50. The ascending triangle does point to further downside than that, but we really need to break those levels definitively to make a judgment call there. On the plus side, the 10-year Treasury has really, the yield has really come down. So yield goes down, bond price goes up. So that's good. But yeah, the weakness has really been in the tech sector this year. But good year for a diversified portfolio. Bonds are doing decent. International stocks, emerging markets doing very well. Small caps are doing well. Values doing well. Growth, not so much. Commodities are also doing well, especially the precious metals. We did have that little freak out a couple Fridays ago where we saw big pullbacks in that arena. But in a general rule, if the dollar keeps declining, and really if we break below this 96 level here, it's going to point to further downside in the dollar, which is good for those precious metals. So if we do break that level, we might look to add a little exposure in that. We got to find a vehicle that doesn't mess people's taxes up. But let's see. Yeah, you see here, international is doing well on a relative basis to the S&P. So yeah, we're just we're waiting to see which way we break out here.
Okay. Well, that's why we have you, Mike.
All right. Anything you want to add on the markets, or should we get into
I think let's get into the blog posts.
All right. So all of our social posts and blog posts go out to our Facebook page and LinkedIn page. The blog posts go out on our website, but the social posts don't. So if you want to see all the information, go to Facebook or our LinkedIn. Friday Live, we're really trying to push the YouTube channel. So watch the videos on YouTube and make sure you like and share them with someone who might be interested in. We're about 750 subscribers. So thanks for everyone that's been watching. Help us push to 1,000 by next Friday. That's my goal.
Good. We'll be happy to talk to more and more people. We have a great deal of depth of knowledge and experience in our group. Nice partners. I've been around for 35 plus years. Mike, holy cow, you're the newcomer, but you've got 15 plus years in the industry,
Getting
correct?
there. Yeah.
Yeah, close. And you're the charter financial analyst, which is the pedigree for money management. Brian's got the certified financial planner, which is the highest pedigree for financial planning. And he's
And
also an
many other
expert on
designations.
yeah, and then and he is also an expert in Social Security as well as other. And he's a good speaker. He's better speaker than the two of us combined, probably. Me, I'm just a storyteller and a compliance monkey. That was my background, being a supervisor for 25 plus years, and I am not sad to be giving that up because boy, I think it added 10 years to my life. So it's quite a good team, and we would love to
So,
have you join us.
yeah, so we do a thematic theme. Monday's Market Monday. I do a look ahead post, but we won't go into that since I just covered the markets. Tuesday, Brian's been doing a tax campaign. So this one's talking about Roth conversions before the age of 59 and a half. Basically, you convert a portion of your IRA. You got to stay within the contribution limit for the Roth. Um, but it's a taxable event. You pay taxes on it. In return, it's into a Roth vehicle, which taxes then will be both deferred and tax free if you wait the appropriate amount of time. Now it does go by the Roth regulation, so that contribution has to be in there for 5 years before withdrawal. Otherwise, it's subject to the 10% tax penalty.
So, and it has to be over 59. I mean, after 59 and a half. So there's a two-part regulation there. One, you have to have that, like Mike said, you have to have the Roth there for at least 5 years. Doesn't matter if you convert it when you're 70, which you can, but you have to wait till you're 75 to take money out of it. All right, because of that 5 year rule, plus 59 being over 59 and a half. That's a little tricky. Make sure you understand there's the two component of the regulation on the Roth.
Yeah, and make sure I would check with your CPA or whoever does your taxes. It might be a good year to do that just because if you are benefiting from the higher state and local tax deductions, it could, kind of keep you in a similar or even lower tax bracket even while doing a Roth conversion and adding to the tax basis.
Okay. Never a bad idea to take care of your tax liabilities when you are able to. Never a bad idea.
So that was our Tuesday post. Wednesday post, you want to talk about this a little bit? About the old Oracle of Omaha?
I mentioned it a little bit earlier, okay, and I won't repeat some of that, but obviously, Mr. Buffett has a whole lot more assets than we would ever dream of, and he's been a sage businessman for 6 generations. I mean, 6 decades or longer, and his tried true strategies are very beneficial to pay attention to. And one of them is highlighted here. If you don't have a purpose to, if you can't find something to invest in, just sit on the cash until you find something. Doing nothing is not necessarily a bad thing. Now realize it's a temporary situation. All right. And some of us don't have that luxury where we have kids to go to college, we have families that need assistance, we have house purchases, mortgages, where we don't have the luxury where we do have to access some of our investments and so forth. So you have to make adjustments on that. But as investing goes, if you have an opportunity to see something that you like, that you understand, go in it. Make the purchase. If you don't, just do nothing. Sit on the cash. And it's good to know. You probably have heard us before that before 2008, with the Great Recession, cash was never an asset class. Now it is.
Yeah, you can I don't know what the current rate on money market is right now, but it's probably 3.4 still.
I, I think, yeah, approaching just a little shy of 4%. I think.
With that said, that's just about even with inflation. So we're not certainly advocating you go 100% in cash and wait for an opportunity. Historically, that doesn't play out because the stock market goes up in most years. And that's the same thing with new money. I mean, the data shows you're better off if you have a long term horizon, just getting it invested. We like to take our time, especially when we're at all time market highs, because eventually we are going to get a pullback. It happens every year. The average drawdown is about 14%. You have a bear market, meaning 20% decline every 3 to 5 years. So sometimes it does pay to be patient. And one of my favorite quotes is by Warren Buffett, and that is be fearful when others are greedy and be greedy when others are fearful.
Again, sage advice. And understand that this last year, when he sat on $400 billion of cash, he didn't sell any of his other assets. He sat on those as well, okay, because of the strategy. So it's not like, okay, well, he didn't panic. There's no need to panic because just as Mike said, the law of averages work to our favor.
Yep. Okay, going to our Thursday post, which is Think Ahead Thursday.
Oh, I like this one. Have you ever noticed a time when policy, something coming in the news, has had such an impact upon the market? And this is where I appreciate Mike so much and the Fed. What do you think, Mike? I used you and the Fed Reserve in the same sentence. Wow. Where they look at the business dynamics, those notes, not necessarily the extraneous news on the outside. And this chart that you can see here is like tariffs were always a hot number the first quarter of 2025. And by the end of the year, there was very little about it.
Yeah.
And the market was down like 20% in April last year, and it recovered very well.
And I mean, that wasn't only tariffs, but another perfect example of that is the DeepSeek fear, how China can come out and do this AI thing for a lot cheaper and put our tech companies pretty much spend all this money for nothing. And who's talked about that lately? No one.
That's right. That's right. And the thought that some other currency or that the dollar might be replaced as the world's currency, not happening anytime in the near future. There is no other currency. There's no other option, and there's no other currency that could handle the ups and downs of swings as much as the dollar. So we don't.
Yeah, I do think that more of countries' reserve currency, reserve money has been going into like things like gold in replacement of treasuries. But yeah, from a country basis, I think we're safe from being replaced for now.
Okay. Yeah, I have a little story. Okay, my granddaughter, Gabby, they moved up to Cincinnati, so she's been enjoying the snow, probably more so than some of our other people. Okay, but she enjoyed the snow, and she was out there playing with her daddy, my son. Okay, well, she saw this nice icicle, picked it up, and thought, "Oh, this would be fun," and she threw it like a spear and hit my son in the lip. After the stitches, oh, okay, well, that's a little harsh, okay? But after the stitches, you say, you expect a 4-year-old to be impulsive. We don't, it's probably not as good an idea for a 30, 40-year-old to be impulsive. So don't panic. Let the things go. And if you see a nice icicle, admire the beauty and God's creation, but probably not a good idea to pick it off and throw it like a spear. Okay. As we go to through the weekend, I want to let you know that President's Day is coming on Monday. Most government offices are closed. Our office will be closed because the market is closed. Enjoy the weekend. I hope you have plans for your loved ones, being Valentine's Day. Okay. Uh, Take the time to take note of how precious life is. If you need a breather, always remember my good old father-in-law, Ron Kelly, always gives you permission to breathe. Okay, because the alternative is a killer. And being President's Day coming up also, take it would not be a bad task. It would be a very advantageous thing to learn a little bit about your presidents of the United States. Learn a little bit about this wonderful republic that's 250 years old. There's some tremendous stories of courage, perseverance, obstinance. Okay, I'll get that. And the world has changed a lot in the last 250 years. The United States has changed a lot in the last 250 years. Okay. Uh, it's beneficial to see and receive perspective. Okay. Uh, the, the U.S. is not going to go away in the next year, 2 years. Okay. Um, Presidents come, presidents go. And thank God they're 4 year terms. And we pretty much have a lock that you can't serve more than 2 terms. I'm good with that. I'm good with that. Mike, do you have anything to add?
Sometimes that's too long.
Well,
But other times it's not long enough, in my opinion.
well, Mike told me that there's only been 2 countries in the world where their stock market has gone down to zero. The U.S., the stock market has never gone down to zero, and I think United Kingdom.
Mhm.
Everything else has. There's been multiple countries that have gone bankrupt. Uh, Not the U.S. or the United Kingdom.
Well,
Let's
way
run.
to wrap up Friday Live for the week on a positive note.
Okay. Enjoy your
All
weekend.
right. Everyone have a good weekend. Before we go, as always, we're going to flip on the disclosures and we'll see you next Friday and go over the Fed's preferred inflation measure among some other data points and see which way this market breaks out. So everyone have a good weekend.
Thank you, Mike.
Securities offered through LPL Financial LLC, member FINRA and SIPC.org. Advisory services offered through LPL Financial LLC, a registered investment advisor. Brian Peluso, Michael Kutch, and David Harper are registered representatives of LPL Financial LLC. Content discussed is for informational purposes only and not intended as an offer or solicitation to buy or sell any security or investment strategy. Any opinions expressed are those of the authors and do not necessarily reflect the views of LPL Financial or its affiliates. All investments involve risk, including the possible loss of principal. This communication may include links or references to third-party websites. These links are provided as a convenience only. LPL Financial and its representatives are not responsible for the accuracy or content of such sites. Brian, Mike, and David and HBK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact us directly for information regarding licensing and registration status. Past performance is not indicative of future results. You should consult with your financial advisor, tax professional, and/or attorney regarding your specific situation before making any